afternoon, everyone, and welcome to Stock Market Today. It's Coram here with a look at the action in today's session, Monday, December 30th. And I'm joined today by my colleague, David Saito-Chung. And in today's market, we saw stocks down, recovering off lows. And of course, always some interesting names to look at underneath the surface. Good to see you, Dave.
Good to see you too, Allie. Thanks for having me today.
Yeah, it's good to have you. New Year's Eve.
Yeah,
Yeah, so we'll get right to it with a look at the major indexes and then a couple of stocks to watch. Dave, I know you flagged ServiceNow, Credo Tech, and Interactive Brokers. So we'll highlight those today. We'll get right to it. First, a look at the major indexes. Here's the NASDAQ down 1.2% by the end of today's session. A little bit of a recovery off lows, but that last 5-minute bar, some selling in the market, Dave. The S&P 500 today down 1.1%, also recovering off lows, but below that 50-day line. The Dow today down 1%, still looking relatively weak here. The Russell 2000, the least hard hit of the day, was able to recover the most off lows, down 0.4%, but also still looking quite damaged. Dave, let's start with your thoughts on the NASDAQ.
sure. I think we are still in an uptrend. We're still above that 50-day moving average, although for short-term traders might be a little more challenging with that crisscrossing of the 21-day exponential as you have on that green line on your chart, right?
Absolutely. So we'd love to see the NASDAQ get back above the 21-day line and hold that level. But there's no doubt there was that character change in the market, Dave. You can see that right on the chart.
hmm
December 18th, Fed induced volatility. And so that's what we've seen ever since, just a lot more whippiness after that steady uptrend that we saw for a couple of weeks and then zooming out really since mid September.
So true. Well said, Allie. 12/18/2024 will be remembered by traders for a while. Even though we cut interest rates, the character certainly has changed. We're probably going to continue to debate on at IBD whether we need to stay at a high exposure level in the market, currently still at 80% to 100%. Today's action was interesting. We were down as much as 2% on the NASDAQ. So thankfully, we didn't end at the low, but it was still a big bite out of, the market. Now, we went into today's session with the Nasdaq up 31%. I mean,
Right.
that's an incredible move, but we still have to be very, alert to more days of distribution like today. It looks like the volume did rise versus Friday, and hence we would call that a day of professional selling.
Absolutely. So it seems like on the downside, the next stop would be the reversal day low. That was 1220. That coincides with the 50-day line. So we'll have to see if the selling continues, if we can find support there. But Dave, I think what's key about right now in the market
hmm
is looking underneath the surface. What are the stocks that are holding up or setting up new potential buy areas while we see this volatility and this pullback?
So true, especially Ali. We are just a day away from the end of the year.
Yeah.
What is going to lead in 2025 may or may not be a continuation of what led in
Mhm.
2024. I think it's interesting today, the S&P was down 1.1%, but looking at IBD's industry groups today, the top three groups were oil and drilling,
Mm.
oil, U.S. exploration, and foreign banks. Oil field services, energy, coal, they were not too far behind. And these groups are up more than 1% amid a nice day for crude oil. So it's going to be interesting to see whether, energy, which has been a laggard this year, becomes a leader
Mhm.
next year.
Yeah, that is such a good point. We'll have to keep an eye on that rotation. And we briefly pulled up the S&P earlier. It is below the 21-day and the 50-day line now. So we'll have to see if it can hold that December 20th reversal day low. That'll be
Excellent
key.
point. Yeah, excellent point. And also, just to give our listeners a little context, just if you could let me mention something I found
Yeah.
in Barron's. Very interesting. They, in their data pages, they track inflows and outflows in mutual funds. And in the most recent issue here, December 30th, they said that investors continued their year-end redemption. So there's some technical seasonal selling going on here. Flow of cash into equity funds remained negative. So not surprising to see that the S&P now challenge that
Yeah.
50-day moving average. Although it should be said too that this is probably a healthy pullback for the market.
Yeah, I mean, with the fantastic gains we've seen all year long, we've been spoiled with some really strong gains. So, yeah, why not end the year with a little bit of a challenge? So,
Yeah,
some twists and turns.
exactly, exactly. Looking at, I'm not sure about that December 18th low, but through today's action, we've fallen I think about 4.4% off the high. That is not big enough a pullback to call it a correction. But if you look at small caps, they certainly have corrected. The
Mhm.
IWM Russell 2000, that ETF has fallen 11% off its high.
Yeah.
It's in that kind of no man's land, no trader's land between the 50 and 200 days. So it's kind of hard to see what the trend is with small caps.
Yeah. And it really is interesting underneath the surface. It seems like a lot of sectors have seen some pretty astounding damage lately, Dave. If you look at the different sector spiders,
Oh,
there's
exactly. Yeah.
not a whole lot of good looking stuff out there. I mean, we do know that healthcare has been quite damaged for a while here. Even utilities, which had been kind of a
Hmm.
bright spot, this weakening as well. The materials, you name it. It seems
Yeah.
like there's not a whole lot out there where there's some support, but we do have the tech sector that does seem like an area that is still showing that relative strength.
I agree with you. It looks like XLK among the sector ETFs are outperforming, even though they were down today. If you go back to XLU, this is not a sector I would expect to be a long time leader. In fact,
Mhm.
they tend to be a defensive sector, and during really bad bear markets, XLU and utilities also fall very, very sharply. So,
Right.
I think XLU's year this year was phenomenal in part because of that excitement over AI
Right.
and the expected demand for energy. Um, let's look at XLY. Did we take a look at the
We have
discretionary?
not. Yeah, that's another I mean, this looks
Yeah.
like Tesla.
Yeah, sure does. Exactly, exactly. The
Yeah.
Tesla's quite a stock. Full disclosure, I do own some shares in that one. But yeah, it's nice to see that you have healthy pullbacks in the leading sectors, and that's what helps give
Mhm.
individual investors a chance to possibly buy at good junctures in the market.
Yeah, so we'll be looking down the road to see what those potential new entries are because that has been the struggle with a lot of the high flying stocks over the last month or so or since the election even so the last 2ish months it seems like it's been hard to get a toehold in some of these stocks and now we're finally starting to see some things digest.
Totally agree.
Okay, let's take a look at some stocks because I know Dave, you've got a big picture to write. So we'll get right to it. Here's a look at ServiceNow, definitely a standout in the software sector, and I think this weekly chart here is
Yeah,
especially interesting, Dave.
it is. For sure. Chris Gessel and Justin Nielsen and I, we like to powwow occasionally to look at potential stocks for the IBD long-term leaders. And ServiceNow, besides being a winner, could bounce off this 10-week line, which could bump it off the watch list of long-term leaders into the
Mhm.
actual list. We don't like to add stocks on breakouts
Right.
for the long-term leaders. We want people to have a little bit of a, if you will, technical margin of safety, but this is a stock that has incredible numbers. If you scroll down just a little bit on the quarterlies, you
Mhm.
can see it's like metronomic, like a metronome, very, very steady top and bottom line growth. It makes me think that, wow, a lot of America's and the world's greatest companies are still in need of becoming fully digital or more digital to become more efficient, to become better at what they do. And ServiceNow is definitely, it seems to me, filling in that niche.
Yeah, keeping a close eye on that pullback to the 10-week. Okay, you also wanted to check out Credo Tech in the group ranked number 7 out of the 197 groups that we track.
Yeah.
And boy, what a reaction to the earnings report here for Credo Tech back on December 3rd, up some 47% that day. And it's been tightening up around its shorter term moving averages, Dave.
I totally agree. Is this one, is it caught your radar at all, lately,
Oh, yeah.
Allie?
Oh,
Yeah?
yeah.
Yeah, I mean, for people who, suffer nosebleeds at high valuations, this stock might not be for you.
Right.
The PE ratio of 315, but look at that growth, 7 cents versus a penny in earnings, 4
Hmm.
cents versus a net loss of 3 cents. And technically, this stock has a lot of the features of a high tie flag, which is often seen in the very best market winners, both on a technical and sort of on a sort of a spirit like uh, factor, regarding the chart analysis here. I like the fact that the company's actually been profitable for a couple of years. It's a company that probably a lot of people don't know about. I frankly don't know diddly
Right.
squat about why their technology is so helpful, but it seems like they're in a really good niche. Maybe
Mhm.
it's a AI data center sort of adjacent play. We'll have to do a little research on that, but I love that triple digit revenue growth now expected to cross 120 million on a quarterly basis. So this is a fundamental leader in my view, not so well known. We want to look for newer names and therefore watching this
Mhm.
closely for a potential breakout out of that flag that you highlighted.
Right. Yeah. Would you be drawing some sort of trend line on this, Dave, or would you want it to get above the meat of this little consolidation? What would
Hmm.
you be looking for?
Yeah, that's a good question. I think the more I look at this stock, I personally would probably buy it as close as possible to the 21 day because even though you have those resistance levels, you could still
Hmm.
get shaken out
Right.
because this is a high volatile stock.
Hmm.
And the more I learn and know about a company, the more I actually tend to buy on pullbacks,
Right.
believe it or not, because most people don't like to buy on fear. If you
Hmm.
buy on the pullback, you're buying amid people selling, which is a an indication of people fearful. So that said, we don't know what's going to happen in the stock. Maybe it goes sideways long enough that a real base forms. In
Right.
that situation, yeah, a trend line or an IBD style buy point would work for me.
Okay, well, let's see if it can have a reversal off of that 21-day line or tighten up a little bit and provide a good lower risk entry for this high octane stock. Okay, let's go to IBKR. This is Interactive Brokers,
Hmm.
another stock that has performed fabulously this year, pulling back to its 10-week line on the weekly chart.
Has this one benefited your portfolio at all, Allie? I wish it did for me.
I haven't been in it. I haven't. I'm not
It,
Mike Webster, he's an Interactive Brokers client, and so he's a believer in the fundamental story, so I don't have that, level of experience with the company, but you're right, I wish I did, looking
yeah,
at this chart.
yeah, totally. I mean, it has a lot of the elements we're looking for. Increasing fund ownership, double digit gains on the earnings and sales, a very, very smooth run up and a strong run up since that breakout out of a cup with handle, if you will, near
Mhm,
125 or so. And so to me, looking at the way this stock trades, actually, I think pullbacks to a 10-week line have proven to be good ones,
mhm,
as well as, tight trading and then on a weekly basis and then in a move. Another reason why I wanted to highlight this, well, there are two reasons, Ali. One is the financial sector should not be ignored. They haven't gotten as much attention, perhaps, in the mainstream media. Although I've seen, you know, in our videos and elsewhere, which I watch, that there is some optimism about the future of financial plays with lower interest rates and a more normalized yield curve. And also, our very own options columnist, our guest columnist, Gavin McMaster, just wrote a piece on a bull put spread on Interactive Brokers that we published today. So if you're interested in seeing that short term trade involving put options that could generate a 19% return on investors.com. We have that story under the research and options area.
Great. All right. Well, thank you, Dave. Another pullback buying opportunity brewing here for Interactive
Yeah.
Brokers that we'll keep a close eye on. All right. Well, that is it for today. Dave, thank you so much for joining me. Great
That was
hearing from
great.
you.
Yeah. Well, I'll definitely want to see you again in 2025.
I think we will. I think we will. Thanks, Dave. And thank you all for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. But before that, we have our monthly market report happening today, 5 p.m. Eastern. Hedge fund manager Jim Ropel and myself, our last monthly market report of the year. This is a show that we've gotten a lot of great feedback on, and we thank everyone so much for tuning in each month. It'll be really great to hear Jim's perspective on the market action for the month of December and what he's looking at for the year ahead. Always interesting, always inspirational. So make sure to tune in today live on YouTube, 5 p.m. Eastern, and then post it as usual across our different formats, investors.com. You can check out the video archive there as well. Thanks again for watching, everyone, and we'll see you back here tomorrow for New Year's Eve.